The most anticipated event of the year is upon us. I'm talking, of course, about the NVDA earnings. NVIDIA Corporation just reported its Q1 2025 earnings, and this has been a very expected event by the market. Everyone has been on tenterhooks for the last couple of weeks, and of course, we had NVIDIA report yesterday, Wednesday, after the close, and perhaps as you might have already expected, NVIDIA surpassed expectations and the stock is right close to 10% as I'm making this video. We'll see where it sits in a few hours by the time that the market closes. So in this video, of course, I'm going to review the latest NVIDIA earnings. I'm going to also be looking at some of the insights from the earnings call, and then I'm going to give you my 2 cents on how I feel about owning NVIDIA right now, what I'm expecting from the stock in the coming months, and overall what my take is right now on AI and how you can best profit from it. So let's get right to it. Starting with the headline numbers, we know that NVIDIA achieved non-GAAP EPS of $6.12, beating by 54 cents, and revenues of $26.04 billion, beating by 1.45 billion. On top of this, we also have some very interesting developments regarding the dividend and also the stock. For starters, NVIDIA raised its dividend by 150% to 10 cents per share. Of course, this sounds like a lot, but the dividend before this was negligible. Now, it's still pretty low in terms of the yield, but nonetheless, it is some return for investors. NVIDIA also announced that the executive board had approved a 10-to-1 stock split. This will probably come into effect around June 10th. This means that NVIDIA, which is now trading at over $1,000, would be then trading at about 1/10 of that price. In this regard, it will be easier for retail investors and smaller investors to get some exposure to NVIDIA, potentially creating more demand for NVIDIA stock. Now, the other headline number that has impressed investors is, of course, that massive growth in data center revenues, growing by about 426% year on year. Now, NVIDIA actually divides its revenues into data center and gaming on the higher level, and basically what we saw was that huge increase in data center savings. As we can see here, 426% year on year, however, noticeably smaller increase quarter on quarter, about 22.6%, going from about 18 billion to 22.5 billion. On the other hand, it is interesting to note the gaming segment grew 18.2% year on year and actually decreased on a sequential basis to 7.6%, after on the previous quarter barely growing by 0.3%. This is of course basically a reflection of what we already know. Most of NVIDIA's revenues are being driven by those data centers and the implementation of their AI chips. Now, if we break down the revenues even further, we can see here that within data center, the biggest increase was in the compute segment. If we actually look at what NVIDIA classifies as the networking segment within the data center, this is actually down 5% sequentially, although it is still up to 142% year on year. Then we can see that gaming and professional visualization, 2 of the other smaller sectors of revenue, were down 8%, automotive up 17%, and OEM and others down 30%. Of course, this is a lot less relevant in the grand scheme of things. Data centers do produce by far the largest amount of revenue, so these small increases and decreases in other segments really aren't affecting the top line or the bottom line that much. On the other hand, if we look at the gross margin, we can see that it increased to about 78.4% in this quarter, up about 2.4 points. Operating expenses up around 10%, operating income up 24%, and net income up 21%, as well as earnings per share up 21%. So it is interesting to note that NVIDIA has managed to increase further its gross profit margin and has therefore become even more profitable in this quarter. Now, while investors had a good idea of the kind of numbers that NVIDIA was going to put out, it was really the guidance that investors were looking at gauging in order to see the potential for the following quarter in NVIDIA. So this is what the company had to say about the next quarter. We can see that revenues are anticipated to be about 28 billion with a variance of about 2%. Gross margins are actually expected to get reduced a little bit and are expected to come in at about 74.8% on a GAAP basis. And for the full year, gross margins are forecasted to be in the mid 70% range. So again, a little bit lower perhaps than this latest quarter where we actually got close to 80%. So overall, NVIDIA continuing with its trend of strong growth, also strong profitability. And even though guidance was optimistic and on the higher side, we are beginning to perhaps see a little bit of a slowdown. Now, before we talk about that though, I also want to point out some of the insights from the earnings call. The earnings call, the CEO of NVIDIA, Jensen Huang, compared AI to the Industrial Revolution. This is what he had to say about AI. The next industrial revolution has begun. Companies and countries are partnering with NVIDIA to shift the trillion-dollar traditional data centers to accelerated computing and build a new type of data center. AI factories to produce a new commodity, artificial intelligence. AI will bring significant productivity gains to nearly every industry and help companies be more cost and energy efficient while expanding revenue opportunities. So as we can see, the CEO Jensen Huang is still very optimistic on the outlook for AI and basically outlining that idea that as companies improve on AI, the increased productivity will create further wealth and further expand the necessity to transfer everything to this advanced AI computing. We also got insights into NVIDIA's new product, the Blackwell. The ongoing software optimizations will continue to improve the performance of NVIDIA AI infrastructures for serving AI models. While supply for H100 proved, we are still constrained on H200. At the same time, Blackwell is in full production. We are working to bring up our system and cloud partners for global availability later this year. Demand for H200 and Blackwell is well ahead of supply, and we expect demand may exceed supply well into next year. NVIDIA, of course, already releasing that next generation of chips, which a lot of companies are already waiting to purchase, such as Amazon, Google, and Meta. And again, highlighting the fact that demand is for the moment still outstripping the supply. Lastly, Jensen Huang was also questioned about any competitive threats to NVIDIA, and he highlighted the fact that NVIDIA is much more than just a chip producer, highlighting that what they are really doing is building AI factories and a holistic system for AI. It's not just one large language model, it's a complex system of a whole bunch of large language models that are working together. And so, the fact that NVIDIA builds this system causes us to optimize all of our chips to work together as a system, to be able to have software that operates as a system, and to be able to optimize across the system. Overall, investors were pleased with the earnings and the earnings call, and as a result, the stock has rallied over 10%. However, as we look currently at the valuation and the upcoming trajectory for NVIDIA, I must question myself. I do have to question how much juice is left to squeeze from this NVIDIA AI lemon. Now, there's no doubt that NVIDIA is still head and shoulders above the competition, even though I do see some potential competitive threats, especially from Google, which is of course still one of my favorite stocks. However, one thing is clear as we reviewed in the latest earnings, and that is that the revenues are beginning to slow down. Of course, those year-on-year comparisons of 400% growth aren't going to continue happening in the coming quarters. The company is still guiding for about a 25% sequential growth, which again is still remarkably strong, but we are seeing the beginnings of revenue beginning to slow down, as we pointed out, for example, in that networking segment. And of course, we also have the limitations of the demand capacity. So as we move forward, I think it's going to be a little bit harder for investors to justify the premium valuation in NVIDIA, especially at these high prices. Now, I actually reviewed NVIDIA after the last quarter, and following that great jump in earnings, the stock was actually looking quite cheap, trading at about 32 times its forward earnings. However, if we look at the stock price right now and its valuation, it is lofty even for such a high-flying stock. As we can see, the trading PE is close to 80, the forward PE is 38.46, again approaching 40, a lot higher than it was when NVIDIA reported last quarter. The price earnings growth ratio on a 5-year expected trajectory is 1.25, so above that one level, which really would be the fair value, even though again not terribly overvalued perhaps. And of course the price of sale also approaching 40 at 38.87 and a price to book of 54. So with that said, while I do expect NVIDIA to keep going up with the broader market over the next few months, I think that a lot of the juice here has already been squeezed and that investors really aren't in for further exponential gains now. That of course might seem quite obvious, but my point here is that one might actually be better advised to find other AI opportunities. Now, don't get me wrong, I still think that NVIDIA is a very quality company. In fact, I expect NVIDIA to keep growing its revenues at a fast pace. However, that does not necessarily mean that the stock price is going to keep rising. This is exactly what happened to Cisco during the dot-com bubble. Of course, Cisco was the darling of the dot-com era. It actually traded at a ridiculous valuation, even by today's standards, trading at over 200 PE. And of course, once the stock market crashed, we saw Cisco's stock price plummet. But what's interesting to see is that if we actually look at Cisco's revenues, they didn't actually fall as much as you might expect. In fact, they only fell for about a year and then they continued climbing. However, as we can see, the stock price actually remained in a sideways trading range and never really returned to that peak of the post-tech bubble era. Lastly, let's have a look at the technical chart for NVIDIA. Now, as we can see here, what I'm identifying here in terms of an Elliott wave structure is a 5-wave impulse, and we are now in the 5 And we are now actually in the fifth wave of a much larger fifth wave of an even larger fifth wave, suggesting that NVIDIA could be approaching a very long-term top. Now what I've done here is taken the length of the rally from the November to March, which are the waves 1 and 3, and I've measured from the bottom of this smaller wave 4. The 61.8 extension of this rally projects us towards $1,300, and this is about where I think NVIDIA will top. However, what I'm really focusing on this chart is the RSI. As we can see, the RSI entered overbought territory back in March, and that's when we saw that initial retracement, and now I expect that the RSI will bounce back again, hit that top trend line which we have drawn from those previous two peaks, and head back down. So again, once the RSI hits that trend line, that for me would definitely be a clear sell signal. So with that said, while I'm still very optimistic on AI and the market over the next few months, I do think that NVIDIA right now doesn't offer a great risk reward for investors. On the other hand, there are plenty of other AI stocks that I've talked about extensively that offer an even better profile. Palantir is one that I've covered many times over on my Substack and on Seeking Alpha, and I've recently covered another one in my last report. However, that is just for paid subscribers for the time being, although I may disclose it in future videos. If you would like to stay up to date with all my latest analysis, please go ahead and follow me on YouTube. And I highly recommend you also follow me on Substack. I do a lot more there: macro research, in-depth stock reports, and weekly technical analysis on various stocks and indexes. Thanks again for watching, and I'll see you in the next one.